You can see my entry price at 1.1742. See how it's the same entry price for all of these exits? That's how you know it's the same position. You can see I ended up taking profit first at 117.30. I took more profits at 117.23, more profits at 117.22. And then as it started to come back up, 117.25, 117.31, 117.36, that's where I started to, again, close more of the trade because it came back up towards me. Now, for those of you that don't know, it's simple. When we're selling it, we make money as it goes lower, and as it comes higher, we're actually going to be losing money. So we want to make sure if we're short, we're mitigating risk and getting out of the position if it's not working for us. So now you can see the P&L. You see how this trade worked out for me. Let's flip over to TradingView. You can see my entry price is marked basically at 117.42. You can see that right here on the right side of the screen. That price is right at the white line, which is our 200 EMA on the 15-minute chart. So I was trading it down from the 200 EMA towards the 8, which is the yellow EMA, the red 21, and most importantly, trading it towards the blue 50 EMA. So the first thing that you have to remember, if you haven't seen my other trade recaps, is that when I'm trading counter trend, meaning counter the direction of the EMAs towards an EMA, like the 50, that's always going to be a level of resistance. So when I'm looking for risk reward here, which I will show you in a second how I took the position and where exactly that risk comes from, but when I'm looking at it, on the 15-minute, I know that if I'm trading from the 200 down towards these EMAs, it could find a lot of resistance, not just at the 50, but because the 21 and 8 are very close to it. In comparison, if you look back at yesterday, you see how the 8 EMA is falling, 21 is above that. Very clear that this isn't a downtrend yesterday. That's normally what you would want to see when you're looking for a high probability short. But when you're trading towards the EMAs like this and they're in your way, you always want to be taking profits. You never want to be greedy thinking it's going to fall through that EMA and just continue lower. So before we get to the 1 minute, I want to point out one more thing. See this divergence? You see how this RSI on the bottom here is rising from the RSI low of yesterday to the price action low of today? That divergence tells me that this, now being above the 50, could hold the 50 and continue higher up towards the 800 EMA, which is way up here. That's something that we look for in our D2 system. But D2s are counter trend trades. I like to trade in trend. It's just where I do best. And those are what we would call A1 breakouts or D1 breakouts. Now, A1s and D1s have a specific checklist, a specific set of rules that you have to follow when you're taking those trades. So as we worked through the checklist, I liked EurUsd yesterday for shorts, not just because of the TDI and the EMAs and because we were able to find risk reward, but even simpler than that, I liked it yesterday, the day before, for it to come lower. This was Tuesday, and it ended up making that move lower, but it ended up presenting my entry at 2:30 in the morning. So Lindsay and some of the guys that are trading in the London session, they all made money on this, but I missed it because I woke up and it was already down here at 5:30. The day before that, which was Monday, you can see I have it marked up. I was looking for shorts again here. TDI is starting to fall. EMAs are short biased. So I'm looking for shorts on Monday, but it was choppy. So you have to understand how important patience is. On top of the precision that you need to take the actual signal, you can have a bias on Monday and Tuesday and have no trades, and then come in on Wednesday and find your winning trade. But a lot of people will end up taking losses on Monday or Tuesday because they will force a trade that's lower probability instead of just waiting. And that will kill you. So to get more in detail with where I took the position, we're going to leave this 15-minute chart right here for yesterday, and we're going to switch over to the 1-minute chart. Now on the 1 minute, instead of divergence on the bottom, which would tell us that it could rise, we had divergence on the top. Now, you always call it the direction that the RSI is moving. So this is bearish divergence because the RSI is moving down, bearish, and price is moving higher. Once we were setting in that high, and then it looked like confirming that high at 117.48, knowing that we're at the 15-minute 200 EMA, it's a significant level of resistance, plus we're getting bearish divergence, that's where I go down to this 1 minute time frame to look for the entry signal. I'm normally looking for the D1 somewhere near the 50 EMA once I found my risk point. I know that this high of the divergence structure, it's not the RSI high, it's the price high. I know that if that holds, we're going to make lower highs and see this move down at least to the 1 minute 800, the dark blue line here. That's the same thing, very close to the 15-minute 50. So that's going to be the ideal target. So when I'm reading risk reward here, if we go back to the 15-minute, you can see to get only a 6.5 pip stop here, I knew that if I was going to trade this down to that blue line, that 50 EMA, the 1 minute 800, I could get almost 3R, 2.75 R. And it ends up giving a little bit push, so you do get the 3R. And if you guys know me, you know I love anything over 2R. So then we've gotten our risk, we've gotten everything lined up. We know that I'm looking for the D1 entry signal, and in the courses, I'll put the links down below so you guys can learn that. I don't want to put that out on YouTube. It's proprietary, but that's where I teach you exactly how to take the position. You now know where the stop loss should go as well. I just explained using the divergence how to create the risk point. Then once you have your risk point, you know how far that is. You should know, okay, if I've got a risk 6.5, I got to get at least 15, a little bit more than 2R, at least 12 or 13, right? We ended up using just a simple risk calculator here to create the 3R if we get that push. And I've done a lot of markups, guys. Like the A1, the D1, and the D2. I've done so many markups over the last couple of years on it. I know when we're trading from the 200 to the 50, it could hold the 50 and come higher. And that's exactly what it did. That's why if you look at the P&L, you can see this last one is red. That's because it stopped me out when it came back up here because I still had a piece of the trade on. But as it's moving down 1R, 2R, 3R, that's when you're seeing me close this trade as it moves in my favor, mitigating the risk, moving the stop loss down so I can't lose any money. And it's just about compounding wins like this. High probability setups, mitigating risk so you don't give back money and you compound the wins and you grow your account as fast as possible.